Welcome, ladies and gentlemen, PDAC 2018. It's day 3 and we are coming to the end of the day, but we have a fantastic company who wants to give us an update, Denison Mines. And with me here is David Cates, the CEO of the company. David, good afternoon.
Of course, it's a really busy day here, and we're gracious that you've got the time to come see us.
Hey, always. Good companies, we always want to follow up. So I think it's like 3-4 months away ago where we were talking about, but a lot of good things happened. You did a resource update, right?
Yes. We were talking not too long ago, and we were discussing how we'd really focused on building up our resource at Wheeler River as we were approaching the pre-feasibility stage.
Okay.
And end of January, we put out a fantastic resource update, 88% increase in our indicated resources on the project. Exactly what we were looking for as we go to PFS. And it's important because to go to pre-feasibility, you need those high confidence pounds.
Yeah.
You need a high confidence resource, so only indicated can go forward.
Exactly.
You can't use those inferreds. And so exactly what we wanted, 88% increase. We've now got 132 million pounds indicated resource on the property. 97% of our resource is at that highest level of confidence.
Super.
Exactly what we needed. And now focus is on the pre-feasibility.
Great. What grades? What was the average grade?
Look, we still had Phoenix, the one deposit, right, at an average grade of 19%. So 70 million pounds, 19%, highest grade undeveloped uranium deposit in the world. The second deposit, Griffin, we're up there around 62 million pounds, and we're around 2%. Now still,
which is still
very
fantastic.
High, just, not 19% high.
Yeah. Great, perfect. You said now pre-feasibility is the case. How long would it take to do that?
Well, we've been working on the pre-feasibility for almost 2 years now, from our PEA, which was first part of 2016. We're looking at being done, the pre-feasibility, sometime in the third quarter. Right? Now that we've got the final resource numbers, we can churn that into the mine engineering and actually develop those mine plans probably by the third quarter.
Wow, that's really fast, I would say. Great.
Well, only because we've spent the last 2 years laying the groundwork, right?
You have done your homework.
Yes, exactly.
That's a good thing. What is money in the bank that you can fulfill all that?
Yeah, look, we're in good shape. We'll probably be around $40 million in treasury at the end of the year. We're being very responsible about it. The idea is that cash really should take us almost all the way to a project financing in a few years from now. We funded our exploration through flow-through shares in Canada. That money is obviously still in the treasury. So we do have a very big year in the field this year, but basically those dollars, they'll take us to where we need to get.
Super, that sounds fantastic. So maybe let's talk a little bit about uranium market. I mean, we all expected 2017 that there might start a little bit of a price rise, right? But we still did not see. We are 21.65, I think, this morning. But what is your opinion? I mean, those buyers, they have to come at one point to the market. I mean,
well, they do. They do. Look, 2017 was an up and down year. We were actually up 17%, the commodity. From Jan 1 to December 31st, we're actually up 17%. Nobody feels that way because of the roller coaster that we had during the year. And it was a roller coaster because we had so many interesting and some dramatic things happen. And then we had utilities, or the ultimate buyers, not respond. And so we had things run up on very important developments like curtailments from Kazakhstan, the beginning of 2017.
Exactly.
And then when we had the utilities stay away, no buying. So traders who had bought up the material, well, they had no one to sell to, price came back down. So we saw that happen again late in the year when Cameco announced that the world's largest and highest grade uranium mine, McArthur River, was going to be shut for 10 months. We saw the uranium price rally. The Kazakhs came out with another announcement. It wasn't the best announcement. People were very confused by what it meant. And all of a sudden, people said, well, I don't know. And this Cameco shutdown's only 10 months. So the utilities step back still, and so we saw the price come back down. At the end of the day, the utilities, they still need to buy. They need to buy a lot.
Of course.
The contracts that they have are coming off. And this is what shocks me about it, because the reason Cameco has shut McArthur, even if it's for 10 months, I believe it will be longer. They're saying it will be longer. But the reason they've shut it is because they don't have contracts beyond 2 to 3 years from now that make money. and they need to replace with new contracts.
But do they need in the contract $60,
well,
$70 maybe?
They're saying 40 or 50 minimum for them to even start thinking, and they need the mine contracted, not one or two. They need the mine at that level. And so the utilities really have got to hear that and say, well, the contract price of $31 today, or $30, well, that's pretty far away from the world's largest and highest grade mine coming back on. That should be a drive for them to come back and start contracting and really working on discovering a real price. But they aren't. Now, I do think the trade petition in the US, the 232 trade petition, is affecting the market. If you're a US utility, and you might be required to buy a quarter of your supplies from a U.S. producer, what would you do?
From whom?
From whom? When? At what price? You don't know. So what you're going to do is you're going to do nothing until you know. And so the market has just gone ice cold because, and the U.S. utilities, even though China's the story in the future, the U.S. utilities is still the largest consumer group for uranium globally. They're all on the sidelines, waiting to see what happens. So it's logical that the market has kind of gone up, gone down, and is iced now. But the longer this pushes out, you know, the reality and everything we've talked about before still comes to roost. It's just how quickly and how violently does this happen?
I mean, you said the market is ice cold, but I could imagine within 4 weeks it could turn into a volcano. Because when it's getting clear that the buyers get a problem, everybody has to rush.
Well, they'll be racing for a scarce number of pounds, and not number of pounds today. Number of pounds for the next 10 years. You know, when people look at the market today, we've been oversupplied for the last few years. I think this year we might be in a deficit because of the curtailments. But the scary thing is how it looks out 10 years. And the mines don't build themselves, and they don't build themselves overnight. And so those utilities, when they start looking 10 years out, then it's really going to be scary. Right now, they're just, you know, ignoring, I think, what will eventually become the obvious.
Great. And I see also you have Uranium Participation Corporation, not just that I want to get away from Denison, but you're also CEO there, right? And I mean, you are buying physical uranium, right?
Yeah, we were very fortunate. We raised 40 million Canadian in the fall of 2017, just before those curtailment announcements, and we deployed like 85% of it, which was our mandate, into uranium purchases before the curtailment announcements. And so we picked up you know, a considerable amount of pounds at a very accretive price, and we had investors that came into the story who got exposure basically at around a $20 uranium price. So even though it's been up and down, those guys are all ahead. Look, we continue to look for opportunities to do that. For us, if we trade at a premium to our net asset value, it's going to be accretive to look at buying uranium, raising new money and buying uranium. That's as simple as it is. There's some math that goes into it, but we continue to be looking at the market to say, what can we buy the material at? And if our share price trades a certain way and there's enough investor interest, we'll raise more money and we'll go buy more uranium. You know, I think the idea is we could put fuel on the fire, or we could start the fire, depending on the circumstance.
Oh, please do that. I would love to see that. Well, David, thank you very much. It was a great update, and hopefully 2018 something will happen with this uranium price. We all need it, especially you guys as companies will need it, because it would make the future a little bit easier, maybe a little bit brighter, right?
Of course. Look, always my pleasure. Thanks very much.
My pleasure. Thank you very much. Yeah, ladies and gentlemen, it was David Cates, the CEO of Denison Mining, and also he's the CEO of Uranium Participation Fund. And you heard it, something must happen in this market. But even more important, Denison Mines is doing their homework. They have over doubled their resource, and especially what is really, really important, 132 million pounds in the indicated category. And this is where you build mines, nothing else. So they did a great job, great company, 40 million in the bank, enough money to get until the project finance. I think that's a compelling story, a great speculation on the uranium market. Check it out. Thanks for watching us. Bye-bye from Toronto.